Welcome to Institutional Weekly by Finery Markets, where we decode the week's most impactful digital asset developments. This week, Bitcoin's rally fizzled, sparking $800 million in liquidations across BTC, ETH, and DOGE, while institutions continued making strategic moves. FTX begins its $5 billion creditor payout, with some receiving nearly 120% of claims. Meanwhile, Circle kicked off its IPO process, targeting a $6 billion valuation. Let's dive into this week's key developments. The cryptocurrency market faced a significant shakeup as over $827 million in leveraged positions were liquidated during a broad market decline, with long positions accounting for $747 million of the total. This massive sell-off, reflecting a 4.3% drop in total crypto market capitalization, coincided with disappointing GDP data and ongoing uncertainty about Trump's global tariff policies, highlighting the continued correlation between crypto markets and traditional economic indicators. Bitcoin traders experienced the most severe impact with $222 million in liquidations, followed by Ethereum at $122 million. Solana XRP and Dogecoin completed the top 5 in daily liquidations. Among major cryptocurrencies, Dogecoin led the losses with a 9% decline to under 0.20, its lowest point since May 8th. Solana dropped nearly 5% to $160, while XRP decreased 3.3% to $2.20. Ethereum experienced a 3% decline to $2,573. Bitcoin, despite briefly touching $104,000, ended the day down 1.3% at $104,730. Showing significant retreat from its recent record high of $111,814. The institutional crypto landscape is evolving with Shares and Osprey Funds SEC filing for innovative ETFs, combining Ethereum and Solana exposure with staking rewards. These proposed funds would maintain at least 80% investment in their respective tokens, with a minimum of 50% staked for yield generation. Anchorage Digital, a federally chartered bank and crypto custodian, will provide custody and staking services. The ETFs propose annual operating expenses of 1.28% for ETH and 1.4% for SOL, with distributions treated as dividend income for tax purposes. Former FTX users are receiving welcome news as BitGo and Kraken commence approximately $5 billion in distributions as part of the exchange's second round of creditor payouts. The distribution covers roughly 74% of allowed claims, with smaller claims potentially receiving up to 119% of their value, including interest. The total distribution plan aims to return between $14.7 and $16.5 billion to former users. While the plan has garnered praise for making customers whole based on November 2022 values, some users have expressed frustration about receiving fiat rather than crypto payments. Strategy's aggressive Bitcoin acquisition continues, with the purchase of 4,020 Bitcoin for $427.1 million, acquired at an average price of $106,237 per coin between May 19th and 23rd. This latest addition brings their total holdings to an impressive 580,250 Bitcoin, purchased at an average cost of $69,979 per Bitcoin. Jack Dorsey's block is advancing crypto adoption, with plans to integrate Bitcoin payments into its Square platform by 2026. The initiative will utilize the Lightning Network for near-instant low-cost transactions, enabling merchants to accept Bitcoin payments through existing hardware. Merchants will have the flexibility to hold Bitcoin or automatically convert it to fiat currency in real time. The phased rollout will begin in the second half of 2025, building on Square's existing Bitcoin conversions feature. Circle's launch of its IPO process marks another milestone in crypto's mainstream integration. The USDC stablecoin issuer plans to sell 24 million shares of Class A common stock at $24 to $26 per share, targeting a valuation of approximately $5.65 billion or $6.7 billion, including outstanding stock options. Cathie Wood's ARK Investment Management has indicated interest in purchasing up to $150 million in shares. The offering includes a 30-day option for underwriters to purchase an additional 3.6 million shares, with trading to commence on the New York Stock Exchange under the ticker CRCL. Circle's USDC currently maintains a significant market position with a $62 billion market cap, representing about 27% of the global stablecoin market, second only to Tether's 67% share. The IPO timing coincides with advancing U.S. regulatory frameworks for dollar-backed digital assets, potentially impacting Coinbase, which maintains a 50% revenue-sharing agreement on USDC. The offering reflects growing investor confidence in stablecoins' role in crypto trading, cross-border payments, and U.S. dollar internationalization, suggesting the sector is positioned for mainstream adoption and continued growth. That's it for this edition of Institutional Weekly by Finery Markets. Stay ahead of the curve by subscribing to the series and following Finery Markets on LinkedIn. Get the insights that matter. Delivered weekly.